still watching Taking Stock on CNBC TV 18. It was a very tough week gone by, and as you just heard from Sanjeev Prasad before the break, things could get tougher. We have another guest who joins us now. Pashupati Advani is here with us in the studio. Hi Pashupati, good to see you in, but not good times for the market. What have you been up to?
Well, you know, it's obviously the market's having a lot of tensions right now because people are actually looking, there's a lot of bad press coming to us outside of India. You know, we've seen articles from sort of market doyens like Jim Rogers saying that, you know, I liked India, I bought India for the first time a year ago, and now I'm getting, disillusioned. And I think that's the kind of mantra that seems to be sort of permeating all over the Western world at least. And it is affecting our markets because we're seeing negative figures every day. So that's obviously hurting the market.
So, go ahead. Are you selling now, or are you looking at this as an opportunity to add more positions?
No, I think right now it's not the opportunity to add more, because I think there's still, I think the market is too volatile, and it's better to say that if it comes back to the old levels you buy again, or if it goes down further to buy again. We're in a kind of wait and watch mode. But what I have seen this year is that you know, whenever there's been any kind of a burst upwards, there's been a slug of new issues or FPOs or, you know, new paper that's coming in the market, and a lot of that is still not absorbed. So, you know, I've always been a believer that our market is a supply and demand market, and right now there's a lot more supply. So I think the supply started in March, and I think it's still overhanging in April, and we haven't got the allocations that we thought we'd get in this quarter. So I think that, you know, it is taking time for it to be absorbed.
Okay, Pashupati, you know, a lot of bulls have been spoiled by the fact that in this bull market we haven't had any correction. In the last bull market we had 4 or 5 instances of at least 15% correction, I think, and there were 2 instances of even a 30% correction. Would you say that something similar could happen this time around? Maybe may not stop at 10%, maybe the market completes at 20% correction, because clearly earnings are not catching up.
No, that is also true. But I'll say one thing to you, that in the past we used to have jerky corrections. So you'd get 15 or 20% in one day, and the systems would go haywire. I think now what would happen is you may get 20%, but it will be slow over a period of, you know, a month, 2 months, 3 months, and it will be slowly coming out of the market. And I think you know, because the whole tone of the market has changed, there is slightly broader participation both domestically and internationally, and I think that's helping the stability.
So Pashupati, you know, in terms of individual stocks or sectors, is there anything that has entered the value zone now after the kind of fall that we've seen?
I think it's a time to have a relook at, I know the banking index has been hammered, it's a time to relook at mid-cap banks, particularly because I feel that there's the acquisition targets for the larger banks as well as any new entrant that wants to come in.
Even the private ones, the mid-cap private sector?
Well, even the mid-cap government ones. I think those also could be up for consolidation, and I think that the valuations will be more towards improving, you know, the smaller shareholder than the bigger shareholder. So that is one thing. Secondly, I think that, you know, there is opportunity in the infrastructure space, but again, the infrastructure spending has slowed down again because there's not really anything happening. I've been bullish on cement, I've been bullish on steel, both of which have got hit because of the fact that, you know, the projects actually aren't moving.
What would you do with a space like IT, specifically Infosys post its numbers? Because, you know, ever since the stock fell about 6% on Friday, we've been getting a lot of queries as to what retail investors should be doing now. Is this a good time to add?
Well, you know, the IT sector has been, you know, under some pressure because it's not actually been able to move and compete, because generally globally companies are moving up the value chain and are going into the consulting space, and the Indian companies have been slower to adopt that. They have bought small companies in the space, and they're competing now with the Accentures, and, you know, to extent Cognizant is in the space already. So, you know, that is going to have a sort of lag effect, and that's actually pulling the sector down. The other thing is a general thing, which is that, you know, with this new CSR bill coming, a certain portion of earnings is going to be put aside, and I think, you know, when you multiply by the high multiples of IT companies, that's obviously going to have some effect in the prices, and that's something that, you know, will also we'll see over this next 1 year or so.
Okay, so what advice would you give a retail investor who has entered rather late into this, you know, bull run, like they generally do? Is this a time to be sort of taking out some money off the table, or do you think that there's still a lot of returns to be made in the next couple of years?
No, I feel that there is returns to be made. I think if you're a sensible retail investor, you should continue to invest on a slow pace, leaving yourself powder to buy at a lower level. But I don't think you should lose the opportunity, because I think that, you know, this is one of the few countries in the world forward where there is actually growth happening, at least the foreigners perceive there's growth, and then the numbers are showing that we're at 7.5%, 8%, 8.5%, which are great numbers. So even if we come up with 6.5%, 7%, that's still a great number compared to the rest of the world. So it is a place to invest, and our retail should take benefit of it. There are all sorts of incentives, whether it's through investment schemes and ELSS and all these other schemes that you can do, and I would say we need to get more people into the market.
Okay, so Pashupati, from here on, incrementally, what's the biggest risk? Is it more earnings downgrades? Is it monsoon? Is it this whole FI taxation? What is the biggest one?
I personally feel that the biggest risk to us is the currency. You haven't mentioned, but there's been a couple of reports even suggesting that we're going to touch 70 again. And I think that 10-12%, it's already moved up from 62 to 63 plus in over the last 2-3 days. And if we do get a shock like that, that hurts us very much, because it hurts us in our imports. We are still net importers. We have a deficit every month. Oil will cost us more in rupee terms, and a lot of that will not be able to be passed on to the consumer. So I think that's where then the results of the companies will hurt.
Okay.
So in terms of specific sectors, we spoke about the technology sector, we spoke about pharmaceuticals, but anything else that looks like it could be a good buying opportunity for the longer run? You mentioned banks as well. Yeah,
I mentioned banks because I think that's where you're going to get the highest beta in banks. But I think that if you wanted to have I'm actually not so comfortable with FMCG anymore, simply because I think the rural offtake is not what people are promising it to be. But I think that pharmaceuticals definitely. Healthcare is another area where certainly more money is getting spent.
So you'd buy Sun Pharma after that 10% dip that we saw last week?
I think so. I think it's still going. It's still growing, and it's still a great company. But also as you all know, it's getting more expensive to go to hospitals. So why not buy into the hospital chains? Very few of them are out there, so that's why they're trading at very high PEs. But more and more are going to get listed as the PE funds come to market. Again, more supply. But I think those are the opportunities that we need to take.
All right, Pashupati, thanks a lot for dropping by and talking to us. So that's the call from Pashupati. But well, before we wrap up, here's Mangalam Malu with all the key events to watch out for next week.
Well, thanks a lot for that. The next week brings with it the promise of a long weekend, but with that, a lot of events to watch during the week as well. On Monday, stocks like Petronet, LNG and Ultratech Cement will react to the results that they will release over the weekend. But on that day, the research desk will be a busy one with ICICI Bank, Maruti Suzuki, UPL Limited, Bharti Infratel and JSW Energy releasing their fourth quarter numbers. Also, there is a possibility of the GST constitutional amendment bill that may get passed in Lok Sabha. Also, there is an NGT hearing on the vehicles in Delhi, and China will release the industrial profit data which the markets will be watching. On April 27, telecom majors Bharti Airtel and Idea Cellular released their fourth quarter numbers. Godrej Consumer and a couple of logistics companies like Gati and Snowman Logistics also report their numbers. Also on that day, there is the all-important board meet for CRISIL, where they will consider the buyback of fully paid up equity shares. Remember that stock went down nearly 22% from the day's high on the back of this news. On April 29th, housing major HDFC, TVS Motor Company, Biocon, Shree Cement, Kajaria Ceramics, Hexaware and DHFL will release their results. Remember, the ceramic industry is facing some demand pickup, and there is also the all-important FOMC meet, or the decision on that day whether the federal funds target rate will be established that day or not. And there is also a tentative possibility of the Japanese monetary policy statement coming out on that day. On April 30th, Axis Bank, IDFC, Sun TV and Oberoi Realty report their numbers, and there is also the FIPB meet on April 30th to consider 41 FDI proposals which will affect stocks specifically like IIFL Holdings, Kotak Mahindra Bank and Blue Dart. And on that day globally, the Chinese manufacturing PMI data will be released, so the market will be watching that one as well. With that, back to you.
Alright, that's all the time we have on the show, and hopefully you guys will enjoy your weekend and will be fresh on Monday morning, because next week is going to be a big one with expiry week.
Yes, indeed. Thanks for watching.